Mid is asking, um, this group class is designed to make it easier to understand my book, to understand the concepts, to give you some faster, easier ways of applying wave theory as described in the book and helping you get through the more complicated chapters like chapter 3, and also describing the best process to do analysis, which is beginning from the largest time frame, controlling complexity on each chart, making sure there's no more than 55 monowaves and no less than 13. These are all very important things that were not covered in my book, and that will help you substantially speed up the process of application and doing it in a good, efficient, and logical, accurate kind of way. So the purpose of class is not to actually go through real-time analysis, even though we might have some time here and there. Chapter 4 is a pretty short chapter, so we might have some time to do that. So let me just go ahead through Mid's questions first. It can take quite a while to master LA Wave because there's a lot of rules to remember, a lot of things to understand. But of course, my book took nearly a decade of experience and put it together so it would speed up your learning process quite a bit. I think this class that you're having right now will also help to speed up the process quite a bit and get you on the right foot faster than the book would have done. Not going through the highly complicated discussions in chapter 3 is what my actual wave analysis class is. I have a class called an advanced wave analysis class, and that's where we actually look at real-time charts of the S&P, the gold market, T-notes, euro currency, and analyze those from the top down, starting with 2.5-year or 6 monthly charts, controlling the complexity, deciding and determining where the patterns started and stopped, applying all the concepts that we've been talking about, coming up with good wave sequences and wave counts, analyzing the structure to make sure it follows the rules of an impulsive pattern or a corrective pattern. And if it follows all those rules, then we have the beginning and end of a pattern, and then we can lock that in and see how it fits into the next larger degree pattern. So that's what the advanced wave analysis classes are about. This is more to help you how to begin the analysis process, how to do wave analysis, how to use my book, and make it easier than just reading the book. Chapter 3 in my book was done in the very complicated way that it was done is because I was trying to replace the fact that I wasn't there with the person as they read the book and went through the process. So I was trying to guide them step by step on exactly what to do in every imaginable circumstance. But when you're in those advanced classes or just from me talking right now, we can sort of skip beyond or skip over most of that because I'm here to help you speed up that process, and it makes it a lot easier. Let's see, we might have time to go through some charts, but that'll depend on whether we've finished the chapters or not. If y'all want to send me some diagrams of situations that you're not sure what to do about, then we can take a look at those. But again, the primary point of the class is not to actually do real-time wave analysis, but to help you better understand how to use the book to do your own analysis. But I am open to that idea. So moving on to the next question, he says regarding B waves, the general average B wave will take between 2 to 3 times as long as an A wave in any flat or zigzag or triangle. There's flexibility in those rules, but that's generally what will happen. It could be as much as 5 to 7 times as complicated, but generally if you see a B wave that's that complicated in relation to wave A, what you should do is move to the next higher time frame so you simplify the complexity of wave B so it's more manageable in relation to wave A. Because remember, controlling complexity is probably the one concept that very few people pay attention to, but it's one of the most important things required to do good wave analysis. And one of the other very important concepts we'll be going over shortly is the rule of similarity and balance. So I would say the rule of similarity and balance in chapter 4 and controlling complexity on all time frames are the 2 most important things you can do to get to good structured wave analysis as fast as possible. And if you do that, a vast portion of chapter 3 and lots of parts of my book will become unnecessary because it simplifies everything dramatically. Okay, let's see. And I'm not sure what the advanced time factor is, but the rules would stay the same no matter, what the situation. You generally want a B wave to take around 2 to 3 times as long as an A wave, as much as 5 times. If you start going past 5 times the time, then most likely your chart's too complicated and you need to move to a higher time frame. If a B wave takes less time than an A wave, then either it's not a B wave or you're dealing with a triangle. Those are the only two choices. Let's see, the last part here is, I'm not quite sure. Have you created something like the advanced, let's see. Okay, as regarding fourth waves and second waves, you always want the fourth wave to take more time than the third wave, at least the same amount of time. You always want the second wave to take at least the same amount of time as the first wave, generally more time. But you don't want the fourth wave to take 3 times the time of wave 3, and you don't want the second wave to take 3 times the time of wave 1. Generally, a second wave will be between 100% and 250% of wave 1 in time. The same thing for wave 4 in relation to wave 3. And that relates specifically to standard impulsive patterns where 2 and 4 do not overlap. Once 2 and 4 overlap, all the rules change and things can get a lot more flexible. Terminal patterns allow for unusual conditions where the fourth wave can take less time than wave 3 and the 2 wave can take less time than wave 1. But that's only if wave 2 and 4 overlap and they're sharing some of the same price range, which then means wave 1 is not impulsive, wave 2 is corrective, wave 3 is corrective, wave 4 is corrective, wave 5 is corrective. The whole thing would be the end of a major trend and you would start a major reaction. But we'll take a look at some of those patterns in chapter 5. Okay, so let me move on to the next question. Now, I have to point out to everyone that you can't send me, for whatever reason, Windows just will not open these PowerPoint documents. I don't know exactly how to do it. I've tried, they won't let me do any Word documents, no Excel documents, and no PowerPoint documents. So I can't open these charts that you've sent. If you can take a screenshot of whatever you're looking at or do a PDF file and send me those, that would be the best way to take a look at the whatever questions you're asking. Let's see, I'm gonna go ahead and unlock your mic real quick, Santosh, just to see if there's anything we can do real quick. So do you have any charts that either I could see on your screen really quickly or you could send to me an email as a PDF file?
I can share my screen, Glenn. Thanks for this opportunity.
Okay, let's see, I haven't done this in a while. So make presenter. Okay, so you're gonna have to look at the questions you have because I won't be able to see your questions at the same time I see your screen, and make sure to give me mouse control. And I can't spend a lot of time on this because we have to make sure we finish chapter 4. Okay, first thing I can tell you by looking at this chart, it's not properly constructed. You're not gonna have data that looks like this where it's sort of awkward and it just looks strange. You have very violent little, go back to that other chart. Go back to the orange colored chart. Yeah, see how you have, waves that take quite a bit of time. You have this one little tiny kink and then it takes, long periods of time. This kind of, there's something wrong with the way you're plotting the data. Most likely you're not equally spacing the highs and lows as they occurred in real time. You're trying to make them happen at the point that they appeared to happen on the chart. So let's say the high happened in January and the low happened in December. You're not going to plot the high in January and the low in December. You're going to plot the high in the middle of the year and the low at the end of the year, so they're equally spaced apart. It's very critical. Otherwise, the charts will start to look strange and they won't relate to the diagrams in my book. Okay, so if you can spend some time fixing these charts so they look more appropriate, it'll be easier to analyze and compare to the diagrams in the book. So does that answer the question on this particular chart? It looks like you closed off your mic, I'm not sure.
No, Glenn, so I have this chart in the weekly chart, which is just the
Yeah,
way it is plotted, which is
yeah.
equally spaced chart.
This one looks a lot better. I don't see any
Yeah, so
weird kinky manipulated kind of data. Remember, for everyone, it's super critical. You always plot the highs and lows equally spaced apart. It doesn't matter if it happened the first minute of the day and the last minute of the day. It needs to be equally spaced apart. If you don't do it, the charts will start to look strange and you won't be able to do good wave analysis. Okay, so what about this particular chart did you want to ask a question about?
Yeah, so a couple of questions I had in this chart. This is the same chart that was, that is timely space. Uh, in the second, lecture, you covered that retracement less than 38%, typically makes it a kind of corrective. 38 to 61%, which is impulsive, and more than 61%, it is, again the corrective, way. So I just wanted to
Right.
confirm on this chart, right, whether no I had marked those numbers properly over here. So it is the same chart which is along the timelines. So that's what I wanted to understand whether my markings are appropriate or not in this chart.
We're talking about a lot, analyze a lot of time. We don't really have time for that in the class because
Understood.
it's just too much work.
Okay.
So just be aware that any kind of substantial advance followed by a 38 to 61% retracement is typically going to be an impulsive pattern. If it's comfortably less than 38 or more than 61, it's more likely corrective. The amount of time that the correction lasts is something you have to consider too. We'll get into that in chapter 4 today regarding the rules of similarity and balance. But I can tell what you're doing here is you're not beginning your analysis from the right place, which causes lots of confusion. And if you go back to your other chart, the blue chart, see, if I looked at this chart, first of all, there's probably more than 55 monowaves, so right off the bat, it's too complicated. So you want to start from the less complicated, more recent event, and you're looking for violent price action on your chart that's not retraced more than 61%. So this would be the place. My mouse isn't working because you didn't give me mouse control, but the low in 2019, the violent rally, that's where your analysis should begin. Yes, right there. That's where your analysis should begin. Forget about everything else. It's not relevant. You have to figure out what this rally is. And until that finishes, it doesn't matter what it's a part of. So this is where your analysis should begin. And then you would work down to maybe daily charts if needed. But that's where the analysis should begin, right where your mouse is currently pointed at. Okay.
Okay.
Let's go. I've got to get back to class because we're going to take too much time doing this stuff. We're going to miss actually covering chapter 4. So let me take control of the screen again. Let's see, how can I do this? 1 second. Okay, so can you see my screen, Santosh?
Yeah, I can see your screen, Glenn. Thanks.
Okay, so let's get back to the charts. This was another chart that I looked at. I'm not sure who sent this to me, but I can tell also by looking at it, there's something very strange about the way the chart looks, like this tiny little action there, this weird little behavior there. It has a weird, almost like crinkety old building look to it, and that means that the plotting of the data is incorrect. Okay, so you're gonna have to rework how this data is being plotted. Okay. Okay, so I'm gonna go ahead. Can you put your mic on mute? Okay, let me go ahead and open up the Kindle. If we have time after we've gone through chapter 4, then we can come back to some of the other questions, but we can spend way too much time on this stuff. So let me get on to chapter 4. Okay, there it is. Okay, so the point of chapter 4 is after you've gone through this process of identifying impulsive and corrective patterns, and realize that chapter 3 goes into tremendous detail regarding F3s and L3s and L5s and all these different things. You probably don't need to go to that level of detail and that kind of complexity in your analysis, as long as the first thing you do when you're looking at a chart is you find the largest, most violent move that occurred that is hopefully retraced less than 61%, but even if it's more than that, the most important move on any chart will be the largest, fastest move in the shortest period of time. That's going to tell you that one pattern finished and a new pattern started. So the end of the point where right before you got the violent move will almost always be the end of an L5 or an L3, and you started a new trend. So the most important thing when you're designing your charts, start from the largest time frame first, control the complexity between 13 and 55 monoways, and then the next thing you want to do is find the highest high and the lowest low on the chart. And did the most violent move happen after the highest high? The most violent and largest move happen after the highest high? Then you're going to want to begin your analysis from the highest high. If it began from the lowest low, then you want to start your analysis from the lowest low. And if there isn't enough complexity when you do that, then you're going to have to move to the next lower time frame. So let's say you had a chart that covered a few years and you're looking at a monthly chart and the most violent move happened in the last 2 or 3 months, and there's only 2 or 3 or 4 monoways on the chart from that low. Well, then you're going to have to move to a weekly chart, but starting from that low. And that's going to have to be spread out. When you get to your weekly chart, you're going to spread out the time. You're not going to worry about all the history on the monthly chart. You're going to start the weekly chart from the lowest low of that monthly chart where the violent action began. You're going to spread it out so that your progression on your weekly chart occurs at about a 45-degree angle, and make sure the complexity of that weekly chart is again between about 13 and 55 monoways. And when you do that, then analysis starts to become easy, and it's easy to find the moves that are retraced more or less than 61%. It's easy to label them as a 3 or a 5, and that's what you're going to be spending your time when you're dealing with chapter 3. That's the whole point of chapter 3, is identifying impulsive or corrective patterns. And then when you move on to chapter 4, the goal is to try to start piecing together all these random 3s and 5s and finding identifiable wave sequences. So the identifiable sequences are on the next page here. It's actually going to be on the next page. I may have to go back here. But so if you look here on the page, you can see the 5 major sequences. 2 of them are numerically the same, but they form 2 different patterns. So you have 5, 3, 5, 3, 5, 5, 3, 5, which is a zigzag, 3, 3, 5s, which are flats, 3, 3, 3, 3, 3s, which can be triangles or terminal patterns. A triangle would be typically a correction in the middle of an advance or decline, not always, but usually. And a terminal would be an impulsive pattern, but is made up of 5 corrections that concludes in advance or decline. So it'll be moving upward or downward, where triangles generally move sideways. So that makes it somewhat easy to determine whether you have this one or that, this kind of pattern, or this one. This one will be going sideways mostly. This one will be going up or down. And the minute it's over, you get a very violent counter trend move that'll be the most violent you've seen in a very long period of time. Okay, so taking it back one step, when you finish the identification of the 3s and 5s on your chart, which again is mostly based on how much retracement occurred and how quickly it occurred, then the next step is to try to group these into patterns that make sense. And there's only 4 main sequences. 2 are identical, but they represent 2 completely different patterns. So you're looking for monowave groupings, and the first thing you're going to want to notice about your groupings is, does that 3-3-5 or 5-3-5 or whatever the sequence is, does it generally go sideways? If it does, then you're going to be dealing with corrective action, almost always, except with rare exceptions of terminal patterns that may look like they're going sideways, but have to trend at least a little bit up or a little bit down. But generally, if it's going mostly sideways, it's going to be a corrective pattern. If it's directional in movement, the odds are much better. It's going to be an impulsive sequence. If not, it'll be a complex correction. But you should look at directional action initially as impulsive, and if it doesn't follow the rules, then it would default back to corrective. If it's mostly going sideways, then you would default it as corrective. And if you apply the rules and they don't quite work, then you might be forced into a very unusual and rare terminal pattern, which they're super rare and only happen once in a blue moon. But that would be a distant, maybe 5 or 10% of the time, maybe 5% of the time, that might be a terminal pattern. But this gets you started, where you have your sequence, you have the general direction of the sequence sideways, making the general assumption is going to be a corrective pattern, or generally directional, it'll be an impulsive pattern. And then you're going to figure out which one of these sequences it falls into. And your focus should be only on the simple patterns initially. These more complicated patterns are just grouping all together and separating them by an X wave. So you might have an ABC and then an X wave and then another ABC, but you're going to always start with the foundational patterns. All bigger patterns are made up of these foundational. Now there are two additional phenomenon that I discuss on my website. If you want to go to the website in the educational section, the F letter, the would be a diametric, which would be 7 3 instead of 5 3s in a row, it'd be 7, and a symmetrical 9 3s in a row. Symmetricals are super rare. Only seen a few in my life. Diametrics have been happening fairly often the last 10, 20 years. Pretty rare. Triangles very common. All the others are very common. Okay, so once you've figured out a sequence and you've decided that sequence is going mostly sideways, if it's impulse, if it's correction, which would be the 3 middle ones here, or if it's very directional, it would be this one or this one more likely. Once you've decided on that, then we have to move on to the next critical thing. You've decided the structure, you've pieced them together into a sequence, you've looked to see if it's going sideways or directional, so you've sort of defaulted to whether it's going to be corrective or impulsive. You've controlled the complexity of your chart between 13 and 55 monowaves. You've hopefully identified the most violent movement on the chart to tell you which direction the trend is in. And then we can move on to the next most important thing, which is making sure you're comparing like degrees with like degrees. So this moves on to what I call the rule of similarity and balance. So if you're looking at a pattern that say takes 10 days and $10, and you're trying to connect it to a pattern that takes 1 day and $1, that's not going to work. Complexity and time, or time and price, which together create complexity, but time and price are integrally connected to degree. So whatever degree you call something, it doesn't. The degree concept is sort of flexible, but once you've decided or named something a particular degree, then what you've done is you've automatically said the behavior of this pattern, so let's say we call something a primary degree, it's $10 in 10 days. That immediately means anything that's going to be considered primary degree can't be less than about 1/3 of that, so 3 1/3 days and 3 1/3 dollars. And it can't be more than 3 times that, so it can't be more than 30 days and $30. So the minute you name anything a degree, you're saying this is what constitutes this typical price and time consumption of that particular degree. And you want to make sure that anything you're comparing it to is not going to be less than 1/3 of the price or the time of that particular move. So here in figure 4, we have a decline of, again, we could just pretend it's 10 days and $10. And then we have this tiny little bounce. It's less than 1/3 of the price, and it's less than 1/3 of the time. So that means that, is that a question? I just saw a question pop up. That was very interesting. I've never seen that before. Let me see if I can see what that question was. I'm not sure where that came from. I just saw a question just pop up on my screen through GoToWebinar. It looks like it was coming from Santosh, but I'm not sure how that happened. I've never seen that before. So it's less than 1/3 of the price and less than 1/3 of the time. So that means you can't consider this the same degree as this. So if you're looking at a situation like this on a properly constructed chart, it's progressing at about a 45-degree angle, you've controlled your complexity between 13 and 55 monowaves, and you've gone through this sequence. Maybe you think this is a 5 and this is a 3, and I'm not sure what you would call this, but the minute you do that, you know that this 5 is going to have no connection to this 3. So if you have a move that's much smaller in price and time than a previous move, this is the start of a separate phenomenon, and you would have to begin a new sequence from here going forward. So this would be its own 3 and starting its own sequence right with that bounce. So this would be a 3, and since this is counter trend, because this would be the first trending move, whenever the first trending move is a 3, the next one has to be a 3, because there is no such thing as a 3, 5, 3. There's only a 5, 3, 5 or a 3, 3, 5, but the first move in any sequence has to be a 3 or 5. The second one always is a 3, no exceptions. Okay, so if you start off with this move being the first of a lower degree, since it's not big enough to connect to this move, that means this is the first 3 of some sequence. It can't be a 5 because it's completely retraced. So it has to be a 3. That means this has to be a 3. So this would be the beginning of a flat or a triangle based on the sequencing that we saw earlier. So based on here, the first move is a 3. Next one would be a 3. So you'd either end with a 5 or you would get 3 more 3s to finish a triangle. So those are the only 2 choices on an initial, analysis basis when you're dealing with simple structures and not combining them into more complex patterns. So here I would have a 3 of a lower degree, and you might want to actually put a dividing line on your chart just to remind you this is the end of a bigger degree pattern. This is the start of a smaller degree, and you don't want to have anything after this connect to this until this takes enough time to relate to this. So it would have to take at least a third of the time and or a third of the price to be considered the same degree. In this case, if it rallied a little bit here, then the amount of time would start to approach the same time as this. So it'd be approaching 100%, which means this pattern could be considered the same degree as this pattern, but this would be a smaller correction, an ABC, completing a pattern that is now the same degree as this, and now these can be connected together. So let's say you go through an ABC, a 3, 3, 5, the C wave finishes around here, that whole thing compresses to a singular correction, which would be considered just a single 3 for the flat pattern. Flats always compress into a 3. All corrections compress to a colon 3. All impulsive patterns compress to a colon 5. So you would compress this into a colon 3, and that 3 would now be time consuming enough to be considered the same degree as this. And now you can say that this 5 is being followed by this 3, and then the next thing you would expect is another big 5 way down, because there's no such thing as a 5, 3, 3. There's only 5, 3, 5. So the next move would be a nice trendy decline after this nice trendy decline. Let's see if I have any questions on this before I continue. So Roy's saying there are some LEA practitioners who believe impulsive waves are 3 waves as opposed to 5. From your experience, why do they? I have no earthly idea, Roy. I've never heard of that before. I do remember seeing something about a leading diagonal. I think that Proctor's group and the Orthodox LA Wave Campus talked about. In my opinion, those were created because the market's creating wave patterns that they don't understand, trying to fit it into the Orthodox theory. So they had to make up stuff that really is illogical. So I don't fall for any of that stuff. I've never found it necessary. And I think if you look at the history, basically I've been right about the stock market for 30 years, and almost all the other Orthodox LA Wave people have been wrong. So I wouldn't believe any of that stuff that they're saying. Okay, Panchai says, in Excel, what is the method that you use to measure retracement? Let me unlock your mic. I'm not quite sure what you mean by that question. Okay, so Panchai, your microphone is unlocked. What do you mean by that question?
So I mean that in the Excel file in the chart, how you measure, what is method you use to measure the retracement from the previous?
How do I do it really quickly?
Yeah.
Okay, I use what's called a proportional divider. Have you ever heard of that before?
No. Can you show
Okay,
me?
let me see if I can pull this up on Amazon really quick. Give me 1 second. If you go to Amazon.com or go to some online service where you can buy things, you want to look for what's called a proportional divider, and it's a steel structure that opens and closes, and it has 3 prongs. And if you place the ones on the end on any particular high or low, the middle prong will be 61% retracement in one direction and 38% retracement in the other direction, so that you can immediately measure retracements on a chart very quickly and easily. And that's the way that I do it. I just take the steel structure and I do it right on the chart. And let's see if I can find one here. They usually cost about, $20, $30, $40, depending on the quality. There's one that I really like if I can find one here. These are okay, but they're not nearly as good as the preset ones. Let's see if I can find one here. Let me type in ratio divider. The ones that I get, I think, are from Australia. Yeah, this is it right here. Okay, now there's the less expensive ones. There's the larger ones. I think this is the size that I currently use. Let me measure the one that I have real quick that I use all the time. It's good for most measurements. This one is about 5 inches long, it looks like. Okay, so anywhere in the 5 or 6 inch. This one's 6.5 inches is probably good, but this is the one I would probably get, and they are fantastic. So if you put something here, a price high and a low, this will be at 38 or 61% from the high or the low, and it's always exact. So you never have to worry about it messing up like those other dividers. They can mess up and you have to readjust them all the time. So let me copy this page real quick, and I can send you all this link. Let's see, I'm not sure where the best place to put this into all. Let me try this. Send all chat. I'm going to put this in the chat section. Can y'all let me know if you can see that in the chat section and if that link works for you? Can you, Panchai, can you check that out real quick?
Yeah, I saw it.
Okay, did it pull up and work?
Yeah, it can go.
Okay.
Yeah.
Okay, so it's $39. That would be the one I recommend. It works fantastic, and you can use it on any chart on a screen and quickly and easily get to the proper measurements, both price-wise and time-wise. Okay, so 1/3. If it's less than 38%, comfortably less, it'll be less than 1/3. So the 38 is a little bit more than 1/3, but not much. Okay, so let me get back to where we were. So it's very important that anything you try to connect in a sequence, that every part of that sequence follows the rule of similarity and balance. So you connect moves that are too small in price and time to patterns that are much larger. If it's much smaller, then this is the end of a larger degree move. This is going to be a correction of that move or the start of a new trend. In this case, it has to be a correction because this is a 3, it gets completely retraced. This means this has to be a 3 and there'd have to be a future little 5 or another 3, 3, 3 to create some kind of triangle. When that's over and the time is either 1/3 or greater and no more than 3 times the time of this, it's in that 1/3 to 3 times range that allows you to connect this to whatever this is, and then you would have this as a 5. All of this would be combined into a singular 3-wave correction of the same degree as this. Move on to the next wave. So you'd have a 5, a 3 ending somewhere over here, and then the next move would be a 5. And once that whole thing is over, then you would apply the rules and the channeling and the relationships of a zigzag to see if it follows the rules, it channels properly, and so forth. Those things are discussed in chapters 5 and 6. Okay, so this is the minimum requirement for a pattern of the same degree. It needs to be at least 1/3 of the price and 1/3 of the time, 1/3 of the price or 1/3 of the time, one or the other. Usually it's going to be both, but at least one or the other has to be present. Otherwise, you cannot consider it a same degree and you cannot make it part of the sequence. So if you try to make this a 5, a 3, and this a 5, let's say it ended down here, this would not be a zigzag because this is too small and it takes too little time. Okay, so it's very, very important you understand this. This is unfortunately not something most orthodox Elliott wave people pay attention to. They just think any down move is any up move is impulsive, any retracement is corrective, and they don't apply time and price and complexity rules and don't have all the requirements that are spelled out in my book, which I consider part of neo-wave or the new wave theory. So if you don't do this, your wave counts will be wrong. You will have to adjust them later, and you're going to be constantly lost, having multiple scenarios. I'm not sure how many of you in the class get my wave analysis, but you'll notice that I very rarely discuss multiple possibilities. I generally just have one major scenario. I might mention a distant possible second if something doesn't go right, but I generally just have one count and that's it, and either it's right or it's wrong. But that's because of these rules that I'm following, and this is a really crucial. This is probably either the most crucial or the second most crucial rule of the entire wave theory, if it's to be done scientifically and objectively. And it makes sense. I mean, obviously something can't be the same degree if it's microscopic in relation to something else that's supposed to be the same degree. You can't have something $1 in 1 point in relation to something that's $10 in 10 days and consider that the same degree. That's just not logical. So it's very important you follow this rule. If you don't, your wave analysis will be a constant mess and requiring constant adjustments. You'll think all kinds of things are possible that turn out to be wrong. Remember, following rules are more important than what the pattern looks like or what you believe is going to happen or what the sentiment is or what the moving averages are doing or whether it's overbought or oversold. All that's secondary to following these rules. Only after you follow the rules and you realize what it's implying, then you can try to fit it in with whatever else you want to. I don't really recommend it, but you can try to fit it into other things. But the structure has to follow the rules before you start assumptions about how it fits into other kinds of technical indicators and information. Okay, so that's a situation where it's too small and not time consuming enough to be considered the same degree. Here's an example where it's moving into the realm of legitimacy, where it could be considered big enough in price, big enough in time to be the same degree. It doesn't mean it is, but it's possible. So it's very important to realize that just because it is a third of the price and a third of the time, doesn't mean that it is the same degree. It's just now possible that it's the same degree. So if you had a 5, 3, and then a 5, well, then you would have to go to the rules section as we get into chapter 5. We'll do that later. But then follow the rules of what constitutes a zigzag. How does it channel? What are the rules for a B wave? If a B wave takes less time than an A wave, you're not in a zigzag and you're not in a flat, period. There's no exception to that. You could be in a triangle, but you can't be in a flat or a zigzag. So each pattern has very specific rules, very specific retracements, very specific complexity, relationships, and so forth that have to be followed. But what we're doing is we're building toward trying to identify what might be corrective action, might be a flat, might be a zigzag, might be a triangle, might be an impulsive pattern. We're just considering what's possible and making sure that when we attempt to connect these sequences together, that we're connecting them in a way that makes it at least possible before we go on to chapter 5 and begin placing what I call progress labels 1, 2, 3, A, B, C. So this is all predating the point where you're putting labels. You're still not putting wave labels on the charts yet. You're just deciding, is this series of events, these 5, 3s, and 5s, are they of similar time, similar complexity, similar price movement, so that they might be connectable and might be part of an identifiable pattern. So in this particular case, you could say, well, this might, be a 5. This could be a 3. Can't be a zigzag because wave B takes less time than wave A. Can't be a 2 wave, takes less time than wave 1. Could be a triangle, or that this is the start of a smaller correction that needs to unfold before it concludes and compares to this move. So if I were looking at this, the most likely event, this might be an A, B, and a C, and then that combined together would be the conclusion of a :3 or correction. This would be a 5-wave move. This would be the correction. You'd get another 5-wave move down, and that whole thing might be a zigzag. But it can't be a zigzag as shown here. I'm having to take a drink of my, drinking my water. My voice is getting a little rough. Okay, so this is the minimum you're looking to see on a chart to begin to think maybe these pattern or these mono waves can be connected together into a sequence that might create a bigger identifiable Elliott wave pattern. Okay, and here's an example of how that might pan out. If I were looking at a move up, this retraced less than 61%. I can't tell if it's at least 38. It's pretty close. My ratio divider Yeah, it shows us right at 38% right here. So this could qualify as a 5-wave move. This doesn't take enough time to be wave 2. So either it's part of a triangle or something weird is going on, I don't know. But the most logical assumption is that this is a larger degree and this is a smaller degree because it doesn't take enough time or enough price to be likely the same degree. I'm sorry. So this becomes part of a sequence that combined together creates enough time to be actually a little bit bigger than the previous move, but not, not much bigger. So it's not 3 times the time, but it's more than 100%. This is probably, I can't quite tell, but it's approaching about a third, and it's approaching about a third of the price. So it's a borderline case, and because of the sideways action, you would be you'd want to compact this into a singular correction. This whole thing would then just become a singular 3 compared to this 5. And then the next 5 up and the next 3 down, the next 5 up. And these diagrams, by the way, are not well designed based on what you would see in the real world. When I wrote my book 30 years ago, I didn't realize the things that I realize now. So this really doesn't qualify as a good 4th wave if this were a 5-wave move, because it doesn't take enough time and it doesn't take enough complexity to relate to wave 3. So realize, if you want to mark this on the page, that this is not a good representation of what a 4th wave would do in a 5-wave move. This is a perfectly acceptable 2-wave, but this is not a good 4th wave. It alternates with wave 2, but it's too tiny to be following a 3rd wave. Remember, the 4th wave needs to take at least as much time as wave 3 or more, and no more than about 300%, but usually between about 100 to 250% of the time of wave 3. Same thing applies for wave 2. And then the 5th wave, when it's over, the market then will produce that violent behavior that I'm telling y'all to look for. So here's a chart that's probably about 20 monowaves. I'm just guessing. Here's a violent decline. This would be one of the most important things on this chart, along with this move. This one's bigger, and it might even be faster, but it's bigger. So I can immediately look at this chart and know that the trend of this market is up, because the largest, fastest moves, with 0 exceptions, will always occur in the direction of wave 1, wave 3, wave 5, or wave A, wave C, or wave E. There is no exceptions to that. So you immediately can begin to determine what is the primary direction of the pattern you're in. And after that violent move, is it retraced more than 61%? Well, then that violent move is probably wave A of something. If it's retraced less than 61%, it's probably wave 1, 3, or 5 of something, or wave A or C of a zigzag. So that's why it's so important to find these violent events on the chart, because it's going to help you quickly hone in on what the trend is of the market and how you can begin labeling it after you've gone through your 5, 3, 5s. So if I were looking at this chart, this violent move would tell me it's either 1, 3, or 5 of a 5-wave move, or it's wave A, C, or E of correction, but it can't be wave 2, it can't be wave 4, it can't be wave D, it can't be wave B. It can only be in the direction of the trend of one larger degree. Okay, so that's a way to quickly figure out what's going on, is by looking at the most violent price move on a chart, and then from there you can start constructing things forward and backwards to figure out what's happening. So I would look at this and say, well, the biggest trend is up, and that's good. And then we have this counter trend violent, which would be the second most violent move, and the market went sideways after that. So this is the beginning of a new correction that concludes whatever this was and starts a corrective environment. And that corrective environment looks like a flat. The 5, the 3, I don't know why this is enough 5. Because it gets compacted, sorry. So this zigzag sequence would be compacted into a 3. So you'd have a 3 here, a 3 there, and then a 5-wave move down to the low. And when that flat is over, then you would expect new violent upside action, which is what this move is, and retrace the C wave in a short period of time, and then the trend continued. So the 2 most important things on this chart is this violent move is the biggest of all, showing that the biggest trend is up. This is the second most violent move that says whatever this was part of, it's finished, but it didn't retrace all of it. So this is part of the trend, probably impulsive. This is part of a correction. It went perfectly sideways, so this would be that correction. You would figure out the ABC sequence. It looks like a flat. Ultimately, it labels like a flat. and when it finished, the market took off again to make new highs. So this whole thing would be compacted to a single correction. This whole thing would be compacted to a single 5-wave move, and then you would expect another 5-wave move up, because a 5 and a 3 has to be followed by a 5. So that would allow you to predict, as this is ending, that you're going to get another move similar to this, or at least 61% of this added to this. And following the rule of similarity and balance is going to help you get to these points where you can piece together patterns properly by not comparing patterns that are too small in price and time to patterns that are much larger, or not comparing patterns that are much bigger to patterns that are much smaller. So if I were to look at this chart, let's say this move right here, it makes no sense to compare this move to this pattern here. This is clearly a bigger degree. It's much larger in price by a mile. So this must be a smaller degree. So that's very important to understand how to determine the relativeness of degree and how that helps you to count wave patterns. Most people don't do this, but it is absolutely essential to good wave analysis. So here's what happened with that other sequence where you took that small correction, you compress the whole thing to just its own singular correction, so it becomes a single 3. You have a 5, then a 3, then what's assumed to be another 5. Again, this didn't take enough time to be a proper 4th wave. It should have taken a little more time and a little more complexity to, consume a third of the price and a third of the time of this at the very minimum. And then the final high, and assuming that this was complicated enough and time consuming enough, this would be the end of a 5-wave move. The minute that it's over, if you were to look at this as an impulsive pattern and you went through the channeling of chapter 5, you would see it broke the 2-4 trend line very quickly. It also completely retraced the last leg, which would be wave 5, in less time than it took to form. So you'd have what I call stage 1 and stage 2 confirmation of this pattern, concluding this whole thing is a singular impulsive pattern. You would compress this whole sequence to just a 5-wave move. This whole correction now would be compared to this whole singular 5-wave move. And now you can see that the correction is just a little more time consuming than this move, but it takes about a third of the price and about 100% of the time. So it's following the rule of similarity and balance. It's more than a third of the price and it's more than a third of the time. So it can be considered the same degree. So we now have a situation where this is time consuming enough to be considered the same degree as this. So this 5 and this 3 would be considered the same degree, and you would then expect another 5-wave move to finish a 5-3-5 sequence. So you're going to take this step by step. Once you've designed your chart, again, starting from the largest time frame, controlling complexity, finding the most violent move on the chart, that's going to tell you what the largest trend is, and then looking for possibly any secondary violent move that's counter to that to start a counter trend corrective phase like we saw here, so that you can go through that correction, conclude it, and know that the beginning of that counter trend violent move that's 1 degree smaller or slightly smaller than the trending largest move, that helps you start a new corrective sequence that's against the larger trend. So you know where the larger trend ended, you know where the smaller correction began, and it helps you to get to this point where this whole structure is just 1 5-wave move, this whole structure is 1 3-wave move, and it allows you to then predict from this point, as this move is concluding, you can then say, well, the next advance is going to be at least 61% of this move here added to this low. So you could go long at that point. The minute it takes off and exceeds this high, you could put your stop here. Initially, it'd probably have to be this low, but you put your stop here. And when it gets to 61%, you'd want to maybe scale out of a third or a half of your position. And then as structure completes and as the time of the advance starts to mimic times of these particular patterns and channeling looks right and structure looks right, then you could leg out of the rest of your position. Let me see if there's any questions. I'm sure there are some. Let's see. Okay, so we answered that retracement question. Okay, we don't want to get into missing waves right now, Hamid, because that's a more complicated, subtle subject. So I'd rather deal with that a little bit later when we get in chapters, I think it's chapter 8 or 9. But missing waves are a phenomenon that occurs because the complexity of your chart is right in between completely revealing a pattern and not revealing a pattern. So let's say that you were looking at a weekly chart and you had daily price action on that weekly chart. Let me see if I can explain this right. All Okay, so let's say you had a complete 5-wave move on a weekly chart using daily data. But for whatever reason, you decided to go down to a 2.5-day chart instead of a weekly chart, or a 3-day chart instead of a weekly chart, or a 2-week chart instead. Whenever you change the, it's going to change what you can and cannot see. Because when you're plotting the highs and lows of a chart in order, and only the highs and only the lows, as you simplify data or expand data, you're going to get more detail or less detail. So as you're let's just say you create a weekly chart and you're using daily data, there might be a situation where the amount of data for that particular environment at that particular time is not quite enough to show waves 1, 2, 3, 4, and 5. You may miss wave 4 because it only took a half of a day, or you may miss wave 2 because it took half of a day. So it's possible that you'll have a 5-wave move, but it doesn't look like a 5-wave move. And so that's what missing waves are about. We'll have to talk about that later. It's a much more complicated concept, but it just has to do with the plotting of the data and whether it's totally revealing what actually happened. And you can typically solve this by going to a lower time frame. So if you're using weekly high lows and you're suspecting a missing price action, missing waves, then you can go to a daily chart and you'll see, what's really going on. Okay, if a wave gets completely retraced in less than 1/3 of the time, it's still considered. Okay, now I know what you mean by 1/3 of the time. It doesn't matter if it's anything less than equal. So if wave 5 is completely retraced 1 second less than it took to form, then that's completely retraced in less time. It doesn't matter if it's a third, it doesn't matter if it's a fourth, a fifth, a tenth, 99%, it doesn't matter. As long as it's completely retraced in the same amount of time or less, it's possible that you have finished one identifiable wave pattern and you've begun a new one. Okay, so it's not based on a third or any other relationship. It's just as long as it's 100% in the same time or less, that means you very likely have finished one old pattern and started a new pattern, which means a new pattern is either going to be wave A followed by a B and a C, or wave 1 followed by 2, 3, 4, 5. That will always be the case. The minute you start a new trend, it's always going to be wave 1 or wave A. So if I didn't answer your question, then let me know, Hamid, but I assume that answers the question. Okay, on a real-time chart. So Mohit wants me to explain real similarity and balance on a real-time chart. We have a few minutes here. Let's see if I can pull up something real quick. Trying to think of something that might relate to this. This chart needs to update its data, so it's going to take a second. That chart's a little too complicated. Was that monthly? That was weekly. Okay, here would be an example here. This was a very bizarre structure that I had to work step by step through. And you can see here's a move that the complexity is about 3. The time is, maybe 1, 2, 3, 4 data points. And then you have a move that's 1, 2, 3, 4, 5 data points and retraces about half. So these could be considered the same degree because the amount of time is about the same, the amount of complexity is about the same, and it retraces half. This would obviously be the trending wave, this would be the counter trend wave. But then when you go through the actual, you realize that this doesn't look impulsive. If it is impulsive, then we're missing a wave. So this would fall into the question that was asked earlier. You can see the correction we can see is very close to the high. So it's possible that there's a 1 and a 2 down here. And if there is, then this would be a 5-wave move. It could be wave 1, could be wave A, but it could be a 5-wave move. And this would be the correction of that. But the problem starts with wave C. This is a very good educational section actually for this because there's no way to count this as a 5-wave move. The middle section is the short between this one, and this one. This is the shortest. There's no correction that properly alternates with the other ones. And because this can't be counted as an impulsive pattern, this can't be counted as an impulsive pattern. Remember that if you start with a 5, you have to have another 5 after. You can't start with a 5 and get a 3 and then get a 3. So it has to be a 5-3-5, or it has to be a 3-3-5, or it has to be a 3-3-3. So in this case, the minute I realized that wave C was not impulsive, that meant wave A couldn't be impulsive. So it immediately forced me out of the possibility of this being a zigzag or an impulsive pattern, and I had to consider a triangle, or the next possibility, which would be a diametric. So in a triangle, the B wave and the D wave need to overlap. In this case, after wave C, the market just went sideways, and it went sideways for about the same amount of time that the C wave took to form, but it didn't retrace very much. So here again, the rule of similarity says, well, as long as it takes about the same amount of time, then it doesn't need to take a third of the price. So in this case, it takes about the same amount of time, about the same amount of complexity. So it could be the same degree, but it didn't overlap the B wave. So now we've eliminated a 5-wave move because wave C wasn't impulsive. We've eliminated zigzag because wave C wasn't impulsive. And we've eliminated a triangle because wave D didn't overlap wave B. So the only choice left was what I call a diametric, and that's the 7-legged formation. We have a 3, 3, 3, 3, 3, 3, 3. So 7 threes in a row. And then when it's over, you get the violent counter trend reaction, which is exactly what happened after the high in late 2018. So it was this violent movement that told me this is the end of an old move and this is the start of a new pattern. Now, I didn't know if this was the beginning of a bear market for sure, but the minute this move got retraced more than 61%, which taking my ratio divider and putting it right on the screen of my computer, and I marked this in real time in my charts, it passed right around 2708 or somewhere in that area. The minute it got past that point, I knew this was not an impulsive decline, or at least not the start of a wave move, and that this whole thing had to be just an A wave correction. So even though it's violent, it was going to be a side counter trend to the very worst case, and it's currently drifting upwards, so it's actually even more bullish. But the violent nature of it told me this is the start of a new correction. This was the end of this old sequence. It has the design and shape and relationships and channeling of a diametric. Diametrics, if you go into the discussion on the website in the educational section and you type in the word diametric and the question of the week, you can read all about diametrics and how they behave and how they channel and relationships and all that kind of stuff. But the crucial ingredient of a diametric that separates it from all other patterns is that you have 7 sequences of corrections, so 7 corrections in a row. You don't have to have overlap between B and D. You can, but you don't have to. And a period of contraction followed by a period of expansion, or vice versa, where it expands first and contracts second. And it'll drift generally with the trend up or down. And this followed all those rules. We had the violent start of the new trend right here. This told me something old had finished here and something new had started. This showed me something old had ended and something new had started. So we had a separation from here and here. So I knew this was the beginning and end of something. It followed the rules of a diametric. Channels like one. We have lots of time similarities. One of the crucial ingredients of a diametric is you have 5 of the waves of the pattern will be similar in time. So this, we have very, very similar times of wave C to D to E to F and G. So all those time similarities help to reinforce this diametric pattern, and the violent price action wrapped it up and confirmed it. And so I know from this point forward, we began a correction, which may have recently ended based on my preferred wave count, which is right here. So it appears to me that this whole corrective environment is now over. We started a new uptrend, but it hasn't been completely confirmed. To confirm this, we need to see a move bigger and faster than this move right here added to this low. So I don't know if it's going to happen. If it doesn't, if we start getting another sell-off, any significant sell-off below this high will indicate this is all counter trend and we're going to start a decline similar to this green arrow here. It could go on for months. But I don't know if that answers your question, but that does give you some examples of using the rule of similarity and balance on a real-time chart and helping to decide what's equal and what's not. So, I wouldn't have considered this a D wave because it didn't take nearly the amount of time or the price or complexity of this move. So there's no way this could be wave D, even though a lot of wave analysts do that kind of nonsense. It can't be legitimately, logically considered the same degree. It's too tiny. So if it's not going to consume a lot of price, it has to consume a lot of time. It's not going to consume a lot of time. It's got to consume a lot of price. Generally, it'll do enough of both to make it easy to say, well, this is the same degree and it's okay to connect them. But if it's less than a third of the time, less than a third of the complexity, less than a third of the price, there's no way in the world that that could be a D wave right there. So does that answer your question, Hamid? Can you just type your answer, because I don't want to, we really have to end up the class here. Yeah, so dividers should be used. The most accurate relationships, this is Roy's question, he says, are the dividers good on semi-log charts? Semi-log charts are really the only proper way to do relationship analysis. You can do it on an arithmetic chart, but it's not going to work nearly as well, because relationships work only on a log scale. If you're talking with, looking at a chart that's going sideways like this, well, then the relationships don't matter. But the minute it starts trending, anytime a market goes up more than 100% or drops more than 50%, you have to use log scale, and the proportional divider should be used on that log chart. It should only be used on arithmetic charts if the market's not going anywhere, then it'll be reliable. If it is going somewhere, you need to use log charts. Okay, let's see. Roy saying for zigzag using 1/3 to 3 times. Roy, let me unblock your mic. I'm not sure what you're asking me here. This probably was something I went over quite earlier, much earlier on. So it says you're self-muted if you unmute your mic, Roy. So what are you asking me?
Can you hear me, Glenn?
Yes. So what are you asking me?
Yeah, sorry. Do you know how you have a simple time rule? That
it's hard to hear you. Can you talk louder or talk closer to your microphone?
Can you hear me now?
Yeah, it's not any different.
Not
any different. Sure. Just talk loud.
Okay. Can you hear me now?
Yes.
You know how you have a basic rule of the time for C is usually A plus B divided by 2, or A plus B.
Right, that's depending on if A and B are very different, it's going to be A plus B divided by 2. If A and B are very similar, it'll be A plus B.
A plus B. Using the general rule, let's say you say for time proportionality of 1/3 to 3 times, would you then also say that if the time of B is at least that of A, that it is possible that C could be 3 times that of B?
It's possible, but it's very unlikely. If A and B are very similar, the C wave will almost always be equal to A plus B. And if wave A and B are very different, the C wave will almost always be half of A plus B. Okay?
Okay. Yep.
Okay, so let's move on. What is a retracement rule of diametric? In diametric patterns, Panchai, it's a little rough because they don't need to do anything in particular. The controlling concept of diametrics is that you have to have 5 segments approximately equal in time. So as long as you have that and it channels with a contraction first and expansion second, or vice versa, and then you have violent movement after it's over and at the beginning, then that could identify a diametric pattern. Just realize that it's not going to follow the rules of a triangle. It's not going to follow the rules of a flat. It won't follow the rules of a zigzag. It won't follow the rules of an impulsive pattern. So by default, you're going to be forced into it. You never start assuming that a pattern is going to be a diametric. You always start with the assumption the pattern is going to be an impulsive pattern or a zigzag or a flat. Those are the 3 primary assumptions. If the first move is retraced more than 61, you wipe out the impulsive pattern immediately. You wipe out the zigzag immediately. If it's retraced less than 61%, you get rid of the flat immediately and you stick with the impulsive or the zigzag. If the third sequence, like here, is not in any way possible to be a 5-wave move, then you have to get rid of the impulsive pattern and move into triangles. And if the triangle doesn't work, which it didn't because the D wave didn't overlap, then you move into the diametric. So it's a process of elimination, and that's why I have on that cheat sheet, things are in sequence. You start your corrective analysis always with assumption of a zigzag first. If that doesn't work, you move to a flat second. If that doesn't work, you move to a triangle third. If that doesn't work, you move to a diametric fourth. And if that doesn't work, you move to a symmetrical last. With impulsive patterns, you start, with a standard 5-wave move, and if that doesn't work, you're going to move to a terminal pattern. But there's very specific rules related to that, and most of the time they won't be followed, so you'll be moving into corrective action. So if an impulsive pattern doesn't follow the rules, it's corrective. If a corrective pattern doesn't follow the rules of a flat, I mean, of a zigzag, you move to flats. If it doesn't follow the flat rules, you move to triangles and so forth. So that's the sequence that always happens. Okay, and I have one more. Let's see, we can't go through many more because we're running out of time. Yeah, that can't happen, Hamid. You can't have wave A take 2 days and B take 10 days and wave C take 2 days. That can't happen. In a flat, that's impossible. In a zigzag, that's impossible. So it could be a triangle, but it can't be a flat or a zigzag. So realize these rules are very crucial for the development of flats and zigzags. Once you're getting into wave C, it needs to be half of A plus B, or it has to be equal to A plus B if A and B are similar. You can't have a C wave that's equal to wave A and the B wave's a lot different. It doesn't happen that way. That could only happen if you're going into triangles or diametrics, but it will not be a flat or a zigzag. Okay, so that takes care of Hamid's questions. And anyone who doesn't have that wave analysis cheat sheet, write to Magellan and ask for him to send it to you. It'll help you substantially in the analysis process. It sort of simplifies my entire book into just 2 pages, where it shows you how to begin the analysis process, looking at time rules first, and then moving into structure rules, starting with impulsive possibilities and corrective possibilities and the sequencing of that. So write to Magellan, ask him for the wave analysis cheat sheet. And if you take the class on wave analysis, we actually go through that on a regular basis and apply all these concepts in real time. Yes, the rule of similarity and balance holds true for all wave patterns. When you get to an X wave is a hybrid. It's halfway between the same degree as each individual pattern and the same degree as the entire. An X wave to be measured properly should be looked at in relation to the entire previous ABC. So if the previous ABC took 10 days and $10, the X wave should take at least 3 days and $3 to be considered the same degree. So that's how you deal with X waves. You combine the previous entire formation, take a third of the price, a third of the time, a third of the complexity, and make sure the X wave is at least one of those, 1/3 of one of those. If it's not, then the X wave isn't finished and it's going to take more time. Okay, Mohit, does that answer that question? Okay, let's call it a day, and we will move on to the main section, which is chapter 5 next time. Realize that chapter 5 is basically what all the most books on LA Wave are about. Most of them are completely covered by my chapter 5. So chapters 1 through 4 is the build-up before you do what most people do. Most they immediately start placing 1, 2, 3, 4, 5 ABC. They have no idea that what they're doing has massive implications and sort of inherent structural requirements. When they place a wave 1, you know, what does it mean and what does it require? They don't understand all those things. So that's why in my book I built up to that point to make sure that when you started placing 1, 2, 3 ABC, that it was actually possible that you were placing the right labels, because you don't want to do it until you have all these other rules followed and your similarity and balance and your retracement rules are followed and all that. Then you might be possibly correct. And once you do 1, 2, 3, 4, 5 or ABC, then there's channeling rules, there's relationship rules, there's time rules and so forth that have to be followed to completely solidify a flat, a zigzag, a triangle, or whatever. So that's why I went through that whole building up process before chapter 5, which is what covers what most books on wave analysis cover. Chapter 5 of my book is predominantly all books on wave analysis. Chapters 6 through 12 cover all the additional things that help to perfect the wave structure and understand complicated environments and so forth. We're gonna have to call it a day here, and we'll pick it up next Friday. Have a good one, and if you'll have any examples of charts and situations, make sure you send me charts that have proper complexity control between 13 and 55 monowaves, that if it's a trending move, it's going up at about a 45-degree angle. If it's a sideways action, it's covering about half of a perfect square, so we can begin with the proper design before we start doing the analysis. Okay, so I'll talk to you all next week.